What's up everybody, welcome back to my channel, Earn It, Save It, Invest It. And if you haven't heard by now, Nvidia has officially hit the 4 trillion market cap. Now, if you don't even really understand what market cap is, I'm here to break it down really quick exactly what it is, what it means, and why it's useful for you when you're doing your stock investing and when you're trying to value a company. So just gonna quickly break it down exactly what it means and how you can use it. So if you like this video at the end, just go ahead and give a like and subscribe, and let's get right into it. Usually when you hear the word market cap, you're gonna hear a big number. Like I just said, Nvidia hit a $4 trillion market cap, right? The market cap is essentially the value of the company. That is what it is worth. You take how much the stock price is, multiply it by how many shares it has outstanding, and then you get the value of the company. So right now, if you look at our top 12, right now we have Nvidia that just topped 4 trillion, passing Microsoft, Apple, Amazon, Google. Nvidia has been at the top. It's been kind of like bouncing back and forth between Nvidia, Microsoft, and Apple. But as you can see, we're into the trillions in terms of how much these companies are worth. The top 10, right? Top 10 are worth at least $1 trillion. That's the market cap. And then after that, you go into the billions, Tesla, JP Morgan Chase, and plenty more. To actually go over exactly what market cap is, it represents the total dollar amount value of a company's outstanding shares of its stock. It's calculated by multiplying the current stock price by the total of number of shares outstanding, just like I said, right? That will give you how much a company is actually worth. Large cap companies, now you might hear these terms, large cap, mid cap, small cap. Large cap companies typically have a market capitalization of $10 billion or more, right? So clearly, obviously, the top 10 large cap, right? Your top 500 are going to be large cap. Then you have the mid cap, which are about 2 billion to 10 billion. And then you have the 250 million to 2 billion, which are going to be small cap. Now, if you didn't see in the slide before, the first one I showed, if you have all 10,497 companies combined together, the total market cap is over $124 trillion. It's insane. So there's a lot of money out there. These companies are valued, and it's just going to keep going up, obviously. But that is where we stand today. What factors alter a company's market cap? There's 2 factors that can alter a company's market cap: significant changes in the price of a stock, or when a company issues or repurchases shares, right? So obviously, it's just with the simple math of, you have 2 parts: how much the stock is and how many pieces of stock are left, right? So, or just in total, right? So you have the price of the stock and how many pieces of stock. If you change either one of those, it's obviously going to change the market cap. If you change the price of a stock and it just keeps going up, the same amount of shares, then the market cap goes up. But you can also change how many shares are available as well. A company can reissue more shares, right? They're saying, hey, we need to find a way to get more funding. We need more capital. So we're going to sell shares. We're going to open up more shares to our company. What that does is that dilutes a company. It makes it less valuable in a sense, because if it's the same stock price and you now have more shares available, technically each share is now worth less, right? And so that's what's going to happen too, is not only technically it's worth less, but then usually when a company dilutes like that and offers more shares, the stock price goes down as well. So you kind of get a double whammy when a company starts diluting like that and starts putting out more shares. The stock price usually goes down because people see that as, hey, this is not going to be a good investment anymore. I want to get out now. So it becomes pressured double. It's way better to get a company that's buying back shares. What they're doing is they're taking shares off of the market, right? So if you have a company that has $100 per share, right? But they're taking off shares off the market. Now that $100 per share is actually worth a little bit more, right? Because you're having a little bit more of the company because less people have an opportunity to get the company. So when trying to invest in a company, you definitely want to know if they will be diluting at all or buying back. Obviously, I'm sure you've heard of share buybacks, and that's exactly what it means, is a company buying back its shares. And all it does is increase the value of the stock, and all the investors, it increases their confidence because you're now making it more valuable for them. What does a high market cap tell you? A high market cap signifies that the company has a large presence in the market. Larger companies have less growth potential than startup firms, but established companies may have able to secure financing more cheaply, have a more consistent stream of revenue, and capitalize on brand recognition. Essentially, when you are a bigger company, right? Nvidia, $4 trillion. To go from a $4 trillion company to an $8 trillion company, I don't know how easy that's going to be. So when you're looking at investment, your return on investment potential, you definitely want to think about, okay, well, is this company going to be able to double up in the value? There's all different kinds of things, right? From the revenue and the profits and margins and all that stuff. But you can also look at that as a market cap. Like, okay, this company's already worth X amount. What's the chances and odds of them going to this amount? So it's just, you kind of want to think about that. You want to, put that in consideration. Does market cap affect stock price? Market cap does not affect the stock price. Rather, the market cap is calculated by the price and the amount of shares, like what I was saying, right? So the market cap will not affect the stock price. But I will say that sometimes, like I would say right now, a Palantir is like 29th, the 29th most valuable company. The market cap is so out there that you might start looking at it like, is it really the 29th most valuable company in the world? Really? And then you start looking at, okay, maybe not. And maybe that starts to put a little bit of pressure. But in terms of technically, the market cap does not affect the stock price. And it's the stock price that actually affects the market cap. What's the importance of market cap? It's often used as a baseline for analysis, as all other financial metrics must be viewed through this lens. For example, a company could have had twice as much revenue as any other company in the industry. However, if the company's market cap is 4 times as large, the argument could be made that the company is underperforming, right? And that's what I'm saying, is that when a company has gotten to a point where it's so big, you might be saying, oh, well, yeah, it's growing at the same rate as all these other companies, but if it's valued at such a higher rate, or at such just a higher pace, whatever, then you might be like, maybe not. Maybe I'll just go with those other companies. So if we take a look at the companies, right, the top 100, 500, let's just go down the list and let's see. Let's go to 100. So the 100th most valuable company is worth $162 billion, and that is their market cap. So you can go through all of this. I'm sure some of you have heard of BlackRock, it's high controversy, conspiracy stuff, right? It's $171 billion. It's the 93rd most valuable stock company out there. You have Verizon, AT&T, you have Blackstone Group, Uber is at 74, Shell, McDonald's, Disney. You have all these companies, obviously, most of you have heard of. And, again, market cap is, you can use it as a baseline of like, okay, where do I feel like this company is going to be? Where can it grow? Can a company like Home Depot go from 371 to 400 billion? How is it going to get there? How are the revenues, the margins, the profits, how are those looking? And if it does get to if it goes from 371 to 400, all right, now that's about a little bit less than 10%, right? So now you start looking at, okay, that's 10%. Maybe the stock goes up around that, but you also have to understand that the stock price and the market cap are the most manipulated, right? The shares outstanding, the companies are not manipulating the market because they have to legally tell everyone how many shares they're either going to buy back or how many they're going to dilute. So they're not there's no manipulation in that sense. But when it comes to stock price, right, and the stock price affects the market cap, you will see things get manipulated, right? At some point, GameStop, right, was worth way more than it ever should have been, right? The market cap eventually hit a certain level that was like, no, this is wrong, right? It's wrong. It's just financially, technically, everything was wrong. Mathematically, it was just wrong. But because the stock price shot up so much, so did the market cap. The market cap shot up so much, and they were diluting. They were still diluting. I believe at that point, I think GameStop actually put out more shares. So, you know, the stock price can be manipulated in that way, right? If you have heavy retail or heavy, hedge funds, Wall Street, really going in on a stock, it can really push a market cap up. Now, you want to look over all their finances and everything to see if that market cap is validated, if it's under, valued or overvalued, and then where can it grow from there. So you just want to take a look at that. And if you look at here, I just saw this, you have something like a Home Depot and a Procter & Gamble right here, right? And their stock is at $373, $158. They're the 24th and 25th most valuable company. The 23rd, ICBC, 372 billion, the price is 80 cents, right? And then you have Netflix over here at 18 and is 1,200. So just because the market cap is so much doesn't mean the stock price is going to be a lot either, right? You have Nvidia, which is, it's at 164 right now, right? The stock price, but the market cap is the highest of anybody. It's at 4 trillion. It's cheaper than the other 5 below it. Then you have, Saudi Aramco, which is the oil company. But again, you'll see that the companies that have the lower stock price are probably an international company. They're not a U.S. company. But anyway, that's how market cap kind of works. It's pretty simple. It does give you a baseline of where to start from, where a company is looking at, growth-wise, and is that confirmed? Like, is that validated? Is the market cap validated by their numbers? And then I'll go over other stuff like PE ratio and all this other stuff that help you figure that stuff out. But I just wanted to put out something for market cap because I know Nvidia has now hit the $4 trillion market cap, and I thought, maybe I'll put out a video about market cap. So if you did like this video, please give it a like and subscribe. And don't forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.